Good morning guys, it is Tuesday the 12th of May. I'm actually heading into the office as we speak, and the markets this week are actually looking okay. You know, there looks like there seems to be a decent amount of opportunity. It's just whether we can see the volatility and the momentum pick up just a little bit to allow some nice sort of trends to form. I am currently in a trade on the DAX. I have been trading the gap fill on the DAX, you know, a little strategy that a follower of our Instagram actually put me onto. He was kind enough to send me an email PDF of a DAX gap fill strategy, and I've kind of been working on that a little bit, as well as some intraday stuff on the DAX as well. So today is going to be predominantly spent back testing. I'm going to see if we can get in any setups on some of the FX pairs, but for the most part, I'm really sort of working on a bit of an intraday strategy and a system that can be used in markets that aren't necessarily trending. You know, we have seen it in the past couple of weeks. The market's in a little bit of a consolidation phase, and ideally I'd like to try and develop an edge that is going to be applicable to these conditions. So I'm gonna get into the office now, and I'll catch up with you when we arrive. This is my first trade of the day on the DAX, and I'm simply just trading that gap fill from the open. So I'm actually getting ready to close out in just a second, and I'll update you when we've actually hit take profit. But I got to get into the office now and get this live call started for our members. Yep, there we go. So take profit has been hit for £1,000. So very good start to the week for myself, given that we only did actually make 900 last week. I'm gonna get into the office now and get on with the rest of the day. Now, I don't know how clear that was out in the car, but I have made my 1% for the day. Yeah, so I don't have like a specific target for each day, but I do think 1%, if you can make 1% in a day, that's pretty good going. Now, it's important not to just be scared to give that money back, to say, you know, I'm not going to trade just in case I give it back. That is not my attitude or my approach whatsoever. But what I will say is I'm not going to be greedy, and I'm not going to chase the markets. It's not even 9 AM and I've already made sort of £1,000 for the day. Last week I only made £900, so you know, I'm already up more than I was for the full week last week in a few hours this morning. You know, I start trading on Tuesday, so I'm only sort of 15-20 minutes into my trading day, and I've already made that 1%. It is time to just take my hands off a little bit, chill out, you know, do a bit of back testing, do a bit of studying, and sort of get on with the day and let those setups come to me. Now, I'm going to go make a cup of coffee and get ready for this call with the members, and I'll catch up with you in a bit.
When you went in the queue, you had the like shock that you're so close to. You're like, I'm like 3 meters away.
The markets are actually shaping up. Things are starting to get moving a little bit, and hopefully we're going to see a bit of momentum into the rest of the week. Now, starting on the US dollar index, from a daily time frame, not much has changed. You can see we rejected perfectly off of that 1247 weekly level, like we had projected on Sunday. Now, dropping down onto the 4 hour just shows how valid this level actually is, you know, given how many rejections we've had directly in around this. Just further Confluence in that to be a good base for prices to have moved up from. So I've jumped on a live call with some of our members to go over a 15-minute indices strategy that we're working on, and I'm also having some fruit as well. I'm not actually looking at anything in the markets as of yet. There's a few things setting up potentially for later in the week, but other than that, had that nice trade on the DAX this morning, and as I say, I'm not eager to try and fling myself into anything just yet. But it's just about to go sort of 10 to 11. I'm going to finish off this live call, and then I'll catch up with you in a bit. I'm just sitting down to have some lunch, and I'm also watching the Chat with Traders podcast. Today he's interviewing Liam Vaughan. If you don't already know, Liam Vaughan is the author of the book Flash Crash, which is about a London-based trader named Nav, who was effectively accused of causing the 2010 flash crash. He was actually arrested and extradited to the US, and I believe at the time of his arrest he was worth $70 million, right? Purely from trading. However, the interesting thing about Nav is he lived a very, very reserved life. You know, he owned a bicycle, you know, he rode a bike to work, and he didn't wear expensive clothes. He actually lived with his parents, you know, and for that reason, the only people who knew just how successful he was were the people who worked with him, and they were absolutely blown away by his attitude, how laid back, how relaxed he was when he took massive losing days or when he had massive winning days. So really, really interesting story. I have actually ordered Liam Vaughan's book on Amazon, and I believe it's probably coming around Friday. Really looking forward to getting that. So I'm going to finish up eating my lunch, and then I'm going to take you over onto the screens, and I'm going to show you how I develop an edge based on my results and back testing, different time frames, different market conditions, etc., and how you can develop your own edge based on your own back testing results. So I've just entered this trade on cable, looking at a simple break and retest of this prior structure here, in line with those EMAs as well, and just looking to ride it down to this next level of structure. Probably take some profit at the 0% of this high to low fib. So probably look to take some profit just down around this level as well, or may just close out the full trade depending on what time that takes us to. So you can see over here on my MetaTrader, we are just floating in a little bit of loss at the minute as price sort of gravitates around entry. I'll keep you updated on this as we go. Now we're going to go over onto my screens and we're going to look at how we can back test and how we can develop a trading strategy or an edge based on our results in historic market conditions. Now, when it comes to developing your own edge or strategy, especially if you're a beginner, you want to develop a system that relies on multiple variables being ticked at once, right? So this could be referred to as like a multiple confluence strategy, or you know, having different layers of confluence. So this could be, your strategy might be a break and retest of a significant level, but you need a 61.8 fib and a 30 period moving average to align with that. If you have that criteria met, you can then take a trade. Now, you can get very, very strict with your criteria. You could say you also need a trend line in there. You know, maybe you need several candles to reject that level, etc., etc. The more and more strict and the more confluences that you add to that system, the less and less setups that you're going to find, but the higher probability those setups will be once you do find them. Now, for a beginner, what this is going to do is, the first thing, it's going to teach you a tremendous amount of patience, because you're not going to be able to execute trades until that lines up. It's also going to teach you discipline, because you're going to see loads of setups that you like, but you know you can only take ones that meet your specific criteria. Another advantage to this multiple confluence sort of system is it's going to remove the human variable, right? You're going to have as little influence on the trade as possible because you're looking for specific technical criteria to line up. All you're doing is clicking a button. Now, as you develop in your trading career and you take this on as a full-time profession, you are going to get to a stage where you're wanting to, you know, pretty much be making profitable trades on a daily basis. Now, with a very strict system, with very strict criteria, it's not going to be possible to generate these winning setups on a pretty much a daily basis. So you may want to generate or develop an edge or a system with a slightly less strict criteria that produces more setups more often. Now, this only downside to this is your discretion and your intuition has to be far, far higher, and this is only going to come with experience, because you're going to be seeing setups much more frequently, and you need to be experienced and knowledgeable enough to know which ones you're going to take. So perhaps you're going to now develop an edge or a strategy that instead of having 4 or 5 criteria, maybe it only has 2 or 3. So now your role in that decision making and your discernment plays a bigger factor in the outcome of the trade. This is where you, as a trader, have to become more consistent and more disciplined in your approach, because you can't rely on having such a strict criteria to enter a trade. you need to be strict in yourself, you need to be more disciplined. This is going to be far more rewarding, however, because you are going to be potentially entering setups every day or every couple of days rather than waiting 2 to 3 days for a setup to present itself. So now we're going to move over onto the charts, and I'm going to show you how I gather data from my backtesting and how I develop an edge based on that data. Now, when it comes to backtesting and developing an edge or testing a trading strategy, I personally believe people massively overcomplicate this. Now, on my chart, you can see a weekly chart of the DAX. For anyone who doesn't know, the DAX is an index of the top 30 German companies. You have Deutsche, you have Volkswagen, you have Telekom, amongst a few others, right? Now, you can use any instrument, you can use any product that you want to trade, any product, any pair, any asset really, and using a system that allows you to delete price like I have on TradingView here, just using this replay tool. I've come back to March 2020. Now, you also want to have something like this spreadsheet, which I've just put up on my screen, which has the product that I'm trading, which is the DAX, the direction, long, short, entry day, so Monday through Friday, stop loss and point, lot size on your broker, trade type, so are you trading a break and retest, a gap fill, an SFP, your execution type, so that could be pending order or market execution, and then the result, win loss, your return, and then down the right hand side you see I have a table of average return on investment, average stop loss size, total long trades, total short trades, strike rate, total won, total lost, total gain. And then I also have how many trades I enter on a Monday, how many trades I entered on a Tuesday, so on and so forth. And then how many break and retest, how many SFP, how many gap fills, etc, etc. Now all I'm doing here is I'm trying to amass as much data on this system as possible, so I can go forward and say, okay, this strategy, my strike rate is, let's say, 40%. Let's look at my wins, right? So let's look at my wins, let's look at my losses. Or I could say, okay, I've got a good strike rate, but my overall percentage gain is relatively low. So I can go through my winners and I can say, oh, could I have afforded a tighter stop loss? If I consistently see that I could have afforded half the stop loss size, that's going to double my percentage gain, right? My percentage return. So these are the little things that we're looking for. Now to bring you over onto my my charts again, and I'm just going to zoom in. I'm just going to make that full screen, right? So just check you're able to see my charts. Yes, you are. Okay. Now I'm going to go through and I'm going to mark up this chart very, very simply, and I'm just going to fast forward through this because you don't really need to see strategy or anything. We're here to learn how to backtest and develop an edge. So now that you've marked up your chart in whatever way you do your analysis, we're going to start looking for trades. Now, for example, we may want to trade from one of these levels. So we're playing through price on the time frame that you desire to enter from, and we're looking for those entry confirmations, whatever your plan stipulates. Now, for me, I'm going to say, okay, I'm going to take an entry here from this bullish engulfing from this level with my stop below the wicks or below the level below this one. In this case, the level below is a daily level, meaning it's very strong, and I've simply dropped my stop below that, and I'm going to be targeting this level up here. Now, I'll then use this capture tool, copy that link, I'll move over onto my backtesting sheet, and I'll put in long trade, entry day. What day would this have been? Let's just say that was a Monday. Again, you would be more accurate in your own backtesting. Stop loss in points is 1,000 points. Lot size on Admiral, again, I would calculate that. Let's just say 5 for now. Trade type, I would say break and retest. Execution type, I would say market. market execution. Result, we don't know yet. We don't know the return in percentage or in monetary value, but I can post my before screenshot in there. And then I can bring you back over onto screen 1 and we can play through this trade candle by candle. If you have any exit criteria, this is where you'd be looking for. If your exit criteria stipulates after a bearish engulfing you exit the trade, etc, etc. Right? Now, are we going to get, seems like we're getting a bit of a pullback here. Price looks particularly weak, so this might be an exit cue for you, right? In your strategy, you might say, you know, we've sort of formed a double top here, we've printed a bearish engulfing candle, I would actually exit this trade. You would then go on and stipulate that. In my own personal rules, I do not exit trades, right? I don't exit trades pretty much regardless of what happens. I will ride it to stop loss or take profit. And, well, in this case, okay, so we win the trade. So we win the trade for 2.89%. I would then take that screenshot. I would then go back over to my, oh, hang on, go back over to my other screen. And I'm then going to paste in the after screenshot. I'm going to say, yep, we won that. We exited it the same day. Return in percentage would be 2.89. Return in monetary value would be 2,800, right? And that's very, very simple, right? We've now just gathered some data on one trade. Now we're going to go back over to the charts. And we would simply do this again and again and again, gathering the same data on every single trade. Then we're transferring that data back onto our spreadsheet. And then by the end of it, you'll have something that looks like this, right? Here's what I made earlier, right? You'll have something that looks like this. You'll have your return in percentage, your monetary return. You'll have your strike rate. So strike rate for this strategy is 57%. You'll have your total long and short trades, how many times you enter on a specific day of the week, how many times you enter a specific trade style, and you'll have all this data that you can gather, and you can say, okay, this strategy produces a 67% strike rate or a 57% strike rate. You can then work out, okay, well, if I've made 10% over 26 trades, risking half of 1%, why don't I then risk 1% and I'll make 20% over 26 trades? Or I can risk 2% and I would have made 40% over 26 trades. So this is where you can start to work out these little things. You can say, okay, well, it looks like I'm very often losing long trades, right? So is that maybe something psychologically you often see longs where there aren't any? So I can see that I've got lost two longs here. This was a long, this lost, this was a long, that was a long in there. These two were longs as well. So I could say potentially, and again, this is something that you can work out, am I losing more buy trades than I am sell trades? Is that something I can change? The idea behind backtesting is just to gather as much data on your own performance and your own strategy as possible that you can take forward. You can have actionable steps when you go into the live markets. You know the things that you already do wrong, right? This is the advantage to backtesting. It's also the advantage to trading a demo account if you're new, is you get that warm up, you get that practice, you know, you get a practice run before you actually take it live. And it's the exact same with a strategy. Backtesting a strategy is the equivalent of using a demo, you know, before you go live. You're just getting a feel for if it works before you actually take it onto live markets. So this trade is now up 1-to-1, and I'm actually just going to close it here for half of 1%. Just a little push down further. And that's me out. So another £500 made on the day, bringing our total for the day to about £1,500. And I'm actually going to get wrapped up now in about half an hour, journal that trade, and then head home. Okay, so I had actually planned on letting myself go home early, but as usually happens, you get caught up doing something. There's always something to do when you're at the office. Always seem to be crazy productive. But anyways, I'm heading home now. Yeah, it's actually 6 PM now. Now that's pretty much going to wrap up this episode of Day in the Life, guys. I know it was a little bit more brief than the last couple, but I do have a very busy end to the week and I'm just not going to have the time to whip the camera out and film. Now, if you did enjoy it and if you did gain value from it, please drop this video a like and consider subscribing, and I'll catch you in the next one.